Good morning, everyone, and welcome to another series of looking ahead at real estate and construction today of importance. So I'm Andres Reed. I'm the National Leader of Real Estate and Construction here in Sydney, but represent all of Australia at BDO. And in our webinar today, we are discussing real estate and construction in 2023. It's a dire situation. We read it in the papers. So we're looking forward to having our panelists give us a bit more insight into what is happening in the construction sector. But before we kick things off, let's just have a look at the housekeeping rules again. People that have been here before will know what this is about. We do have, you are going to be muted automatically. We are accepting questions along the way, so please ask the questions by typing that in, and hopefully we'll have time at the end to answer some of those. It is being recorded, so if we don't get to all the questions, we'll send out an email together with the recording, and we can follow up with you at another point. And please, if you have any technical difficulties, there's a support button at the bottom of the screen. Okay, so let's get underway. So in today's session, we're looking to dive into the macroeconomic conditions faced by the construction sector. And we want to get an understanding as to what is happening, why it's happening, and what might happen in the year ahead. We'll look at economic trends, we'll look at construction inflation and interest rates, we'll look at market observations and other industry issues. And to help us on this journey today, we have with us here Owen Valmadre. He's a director at Hutchison Builders. Owen is one of 8 directors at Hutchison and has been with them for 20 years. Welcome, Owen.
Thank you, Andre.
Hutchins have been a client of BDO through that entire period of the last 20 years, and they're one of the largest privately owned construction company in Australia, with a balance sheet of nearly 400 million and 183 currently active projects. That's massive. They are forecasted to turn over close to $3 billion this year and have 1,850 staff across Australia. Again, thanks for joining us, Owen. We also have Ali Flint and Alicia Rothwell join us from the BDO team. Ali is a partner in the Project and Infrastructure Advisory team in Brisbane, and Ali specialises in macroeconomic and regional economic outlooks and forecasting, both in Australia and overseas. Ali works with public and private sector clients navigating market uncertainty, and we look forward to your input today, Ali. Good to have you.
Thank you, Andy.
Ellie is an audit partner at BDO here in Sydney with over 17 years of experience, and she specialises in the real estate and construction sector. Ellie particularly enjoys working with the construction companies and also authors the BDO Annual Construction Survey. In her role, she enjoys talking to clients about the opportunities and challenges that impact the construction sector and looks to bring insights to her clients and contacts in the sector. Good to have you on board, Ellie.
Thanks, Andre.
Okay, so let's dive in. No doubt you've read the papers, and it's a dire story. The construction industry has faced headwinds over the past couple of years with rising costs, labour shortages, and supply chain issues contributing to a very challenging economic backdrop. This is cause for concern, and we can't help but feel for the players and the stakeholders in that sector. Maybe starting off with you, Ali, can you talk us through the current situation, the current state of the construction sector? What is driving this uncertainty, and what outlook do you have?
So as you've mentioned, the industry has faced some really tough headwinds over the past year. There have been rising costs for materials, there have been labour shortages and supply chain issues, and that's contributed to quite a challenging economic backdrop for the sector. We've had a surge in consumer demand for goods, for building materials, and manufacturing inputs, but that's all contributed to backlogs and delays in the industry. And the sector has also recently been plagued by insolvencies as well. So the outlook for 2023 remains quite challenging. Global market conditions are influencing the price of key construction materials, which have been well above historic levels, particularly for things like reinforcing steel. But the rate of price growth is decelerating, so that is providing some relief for the sector. Businesses have had challenges navigating the continuing volatility, but there are several trends which can be monitored in the year ahead, which can increase competitive advantage and open up new opportunities to address some of those headwinds. So construction was supported through this stimulus measures throughout COVID, and that led to an increase in demand for building services, and it was also exacerbated by demand driven by things like the Home Builders Grant. The sector has been vital in rejuvenating the economy post-COVID, but it noticeably has still had lower productivity than in the 1990s, where other industry sectors have made some gains. So the Productivity Commission has recently released their Advancing Prosperity report last week, which has some recommendations specific to the industry sector. We've had challenging material shortages, and prices have affected profitability and delivery. And businesses will need to work through sourcing alternate supply chain pathways to provide some assurance to customers without significant budget blowouts, particularly for those major projects. There is definitely uncertainty around inflationary pressures, and a close eye will need to be kept on those construction backlogs. In terms of wages in the sector, they are expected to increase over the next few years as companies need to meet growing demand with a constrained workforce. So the labour market shortages are likely to continue in the shorter term, and the lack of experienced labour is expected to drive wages higher and continue to impact the industry. With the demand increasing across the board, there's likely to be, the persistent demand driving high turnover, as workers are going to be in a prime position to choose which projects that they can work on amongst the large pipeline that we have. So what can businesses do? Well, we are expecting that businesses that embrace sustainability in their vision are likely to have a competitive advantage. So the adoption of renewable energy sources and circular economy models are likely to be welcomed by clients, although we note that that does come at a cost. But businesses can leverage future incentives to focus on lowering their carbon footprint. Building efficiencies into the way they operate will also be key to businesses expanding their opportunities and increasing their profit margins again. They can adapt through innovation to optimize efficiencies and also embrace digital transformation to leverage data and information, which also will allow them to maximize opportunity. So in summary, while there have been some headwinds, we are expecting conditions to ease over the course of this year and also into next year. But there are some opportunities that businesses can embrace to turn some of those headwinds into some tailwinds.
Fantastic. Thank you, Ali. That's a good snapshot and a good overview that will sort of guide our discussion today, no doubt. Owen, I'm wondering, you're on the ground, you're seeing this, you've got a pipeline there of 180 projects. How are you seeing this? It sounds like a very challenging environment that you're in. Are you seeing this happen within your projects?
I'd like the tailwinds to kick in a lot sooner than Ali tabled. I don't think it'll be for this year. Probably the other factor that has been left out is, particularly for Queensland and New South Wales, every job's behind due to weather. There's been some serious delays. So what's happened is the employees, it might be rained off, or it might get weather, might be wet, windy, etc. So the employees pay with no productivity for that payment going out to the employees. So the employers are really struggling, subcontractor-wise. So you've got this massive lag on the projects on the existing. I agree with Ali in the fact that I think there will be, certainly on the new contracts going forward, like even for us, But the problem with construction is everything has such a long tail. And so until you work through that tail, depending on the size of your job, then I'll tell you it'll get better once that tail's finished. So for us, it won't be this year. It'll be probably 24 before things starting to get better. There's been a big shift in the pendulum, particularly driven by financiers, to pass all the risk to the builder. Well, that pendulum swung back a little bit towards the builders, I guess, favour is probably the right way to describe it, but that's on new projects. You've still got a mountain of work to finish to get there, and some of the subbies will not make it for various reasons, particularly on the fact of when you priced something 18 months ago at tender time, there might have been a little bit of delay, so they're now starting to deal with the project right now. Our labour costs have jumped quite significantly, as in like you would 30% over that period of time. So they're going to burn. There's some serious pain to be felt yet, my personal opinion, over the next sort of 6 to 9 months before we right the wrongs. So pretty in summary, pretty tough through all industries across all states at the moment for the next 6 to 9 months.
That's a good insight from the ground there. And Ellie, do you echo similar thoughts from your clients that you see going through this?
Yeah, absolutely. I think, you know, when we talk about what I'm seeing as an audit partner, so I've got the benefit of hindsight when we come in to do these audits, but also talking to the people on the ground and hearing what they're experiencing on each of the projects that they're undergoing. But interestingly, with that, we've also got our construction survey, which we publish, and we did one right before COVID hit, and we did one straight after this just recently. And I think what surprised me going through the last 12 months was really COVID has had an impact on the sector, but it's not as you would have expected, with the supply chain issues being the real impactor on our construction companies that we work with. And most of the impacts that are being felt are from these weather delays that are really pushing projects out, and the impacts of that that flow through and continue on into the next project and the next. So yeah, definitely echo that, but it's a different you know, outcome than I would have expected 12 months ago, and the resilience of some of these construction companies pivoting with their supply chain has been really impressive to see them understand and foresee the challenges ahead, you know, people on the ground with restrictions and all that. But I think just to add to that as well, you know, I think we are seeing a challenging year that the construction companies are going through, but they're all talking about a very strong pipeline ahead. So whilst the margins are down, you know, there's a lot of decisions and strategy talks around, you know, go, no-go decisions on the projects they do bid for. You know, a shift back to what they do well in terms of the types of projects that they go for, and just weathering out the next 12 months and then focusing on the pipeline ahead. But it's a very strong pipeline from everyone that I've spoken to.
Good to see. It sounds like there's a silver lining there, but a lot to get through first. We might throw up the next slide, because one of the comments that was made by everyone so far is around the labour shortage. And just maybe, Ali, back to you, just to talk through this, hasn't quite come up. Oh yes, here it is. This sort of graph of the labour shortage. I know it's from Owen, so he can probably talk to the graph more, but Ali, just a rough snapshot. What is happening? Where is the labour going? Is it, you know, impacted by the wet weather? Is it, can this return? What is happening there? Can you talk to this?
Yeah, so there is an incredibly tight labour market currently, and I guess, you know, that's been quite a topical issue for a lot of businesses at the moment, that it's extremely hard to maintain, you know, a steady workforce and meet demand. And particularly for construction, given that demand has increased, there's been quite an increase in the number of jobs in the construction industry. So it's very, very tight in comparison to some other sectors, and very difficult for businesses to find workers, and in particularly skilled workers. So, you know, some occupations in the sector have been in incredibly high demand, you know, from engineers to plumbers. But a couple of things are happening. So we're expecting that to ease. It's probably just that the pace of the easing won't be fast enough for some businesses across the sector. So the government has increased the skilled visa streams as of the last budget. And it'll take some time for this to take effect, but that is expected to combat some of the shortages going forward. In relation to some of the recommendations that the Productivity Commission put forward in their report of last week, there are some recommendations on the government reducing unnecessary licensing restrictions and barriers to labour mobility. So as some of those recommendations are taken up, hopefully that will contribute to easing, although they will probably be a sort of a few years away. Businesses can leverage technology to automate business processes as much as possible. And there are also a lot of initiatives now for professional development opportunities that can be leveraged to upskill the existing workforce. So there's a rise in uptake of micro-credentials and other initiatives like apprenticeship programs, which can ease those labour market shortages going forward. But as I mentioned, it's the pace at which those conditions ease that we're probably going to be an issue, certainly, as Owen said, over the next year.
And Owen, what can be done? What is your company doing to maintain the labour certainty? Is it just increasing prices? Is it what can be done about this?
There's two parts. I'll just cover off on that graph there. Probably yes. The point we're missing, or the point that wasn't tabled here, is there's certainly a couple of form workers that have fallen over. So you've got a shrinking market, plus the job sizes that's being tabled, and you'll see them on later slides. They're a lot larger. So you're going to be restricted by capacity as well. So it'll be pretty common for a form worker to get a $20 or $30, $40 million package based on the outlook, and they're not structured or they're not set up to handle that sort of size. They're sort of set up for a $5 to $10 million package. So what's on offer is too big for the existing businesses. To swing then, what have we done? Well, we've had one of the substantial form workers fall over on us. So we're self-performing. The answer is construction, you have to finish the job anyway. We'll try and limp a subby through. In the particular case of the form worker, we couldn't. So we engaged, it was actually 106 of their workers, put them on our workbooks. So we're doing form work now. So typically we've subcontracted out a lot of our trade, or all of our trades, but we're now self-performing joinery, ceilings and petition, and form work is our main three. So in-house is the answer to our question.
Which is a significant new step. It's probably hasn't been done that much before. And do you see that other construction companies will take that on as well to self-perform on these matters?
They'll definitely self-perform on the existing to finish the jobs if a subcontractor falls over.
Right.
My personal opinion, because to try and remember, everything has been priced back 2 or 1 year ago. So to try and get someone in right now is very, very costly. So it's providing it's, but if it's form work, and you're in your normal cycles and you're just going up the building, all the hard work's been done because you're into your typicals. That's your normal sequencing. So once you're there, it's just continuing straight at the top. So I think yes is the answer. I think a lot more will be taken on, and that's evident by, you would have had when Condev went under last year. Now they're a builder. A lot of the developers self-performed with the existing trades to finish the jobs themselves, and I reckon that'll be the theme for the next 12 months.
Okay. Owen, just picking up on another matter that you just raised there about pricing, and that prices get locked in 9 months in advance and even longer where the projects are affected by rain. What are you seeing happening in the industry around locking in prices or changing prices? How do we manage that best?
I can tell you from our experience, we 3 or 4 years ago, we'd lock in a price and we'd hold it for 60, 90 days, 6 months. Wouldn't really matter. As long as you had the job, as long as it was a negotiation. Now, if we hold ours any longer than 30 days, we're repricing. So it makes it pretty tough from a developer perspective, and that's what I mentioned about the pendulum swinging back. To get a job across the line, they'll probably need pre-sales. We'll give an indicative price early on. They'll need to go with that, but by the time they've got their sales, we would have reset their price again. So it's slowing down the process because of the uncertainty in the market and the uncertainty of what we're seeing from subcontractors. So yeah, prices are not getting held for any length of time. And that will continue.
In a way that's passing on the risk to the developer. Something that's been traditionally held by the builder is now having to be borne by the developer, or at least partly. I think both you and Ellie, maybe Ellie, you can talk about surety bonds and how that market landscape has changed as well. What are you seeing there with your clients?
Yeah, definitely. I think that it's an interesting outlook at the moment when you're talking to any organisation that's guaranteeing anyone at the moment, but definitely the construction space, it is being felt, less so from, the banks and the lenders and things. I think there's still mezz debt and things that are out there should people need. But the surety bond market is definitely tightening from what we're hearing, with some of the larger providers starting to pull back in some of those commitments there. So it's a really interesting thing to see. And Owen, I'm not sure if you've seen similar things in Brisbane as well, but it's definitely being felt here in New South Wales.
I'll jump in there. I can probably comment across the country. To be honest, I've seen numerous times where subcontractors in particular, Hutchie's balance sheet's strong, so we haven't experienced it, but certainly dealing with the cash flow shortages on the subcontractors where they might have a $5 million facility available to them. They'll return $1 million. They will not get that facility back again. So they're reducing it by stealth, by return, but yes, they're reducing their capacity. So 5 will become 4 until they're at a comfort level with the existing financials to ensure that they're not too exposed. But a lot of capacity is getting reduced.
Interesting. I might turn our sort of view onto the outlook and the pipeline. We've spoken about the headwinds turning into tailwinds, but what is the outlook for the upcoming year? Ellie, starting with you, wondering if you can have a sense from your clients to what are they seeing and when are we going to be seeing those tailwinds? What's happening? What are you seeing in terms of the pipeline and revenues?
Yeah, it's an interesting question. Again, I think I'd love a crystal ball in these situations. It'd be much appreciated. But I think everyone's expecting another, 9 months, 12 months of challenges ahead. I spoke before about there is a solid pipeline ahead, but the margins are being eroded, and there are some challenges there that the construction companies are dealing with. Especially, I think, with the cash flow forecast, there's some points there that will be tight over the next 12 months for these head contractors in terms of managing some of these risks as they come off some of these longer term contracts as well. And we're hearing more and more about, the different ways of thinking about these contracts. As Owen was saying, not locking in costs, only fixed for, 60 to 90 days. And that's also flowing down to the subcontractor level where they're doing similar things in terms of their pricing as well. So I think it's moving in the right direction and everyone's fairly positive. I think if you can get through the next 12 months, you'll be in a good position by then going forward in terms of particularly around some of the key areas that we're seeing, like infrastructure is still a big space. There's a lot going on. There's a lot of opportunities. Social affordable housing is another one. So any of the players in those those areas, I think we'll do quite well.
Now, Owen, we've put up another one of your charts here, which talks about insolvencies, and obviously that's one of the main reasons we're all listening in on this webinar today, is because not a week goes past without reading about another large insolvency. Can you talk us through this graph and where you are seeing concentrations, and are there pockets that are particularly impacted by insolvencies?
It's certainly across the board, but if I was to pick a pocket, it's certainly Southeast Queensland. Why is that? I don't know. I'm probably back at, Queensland, we were deemed an essential service, so we were continuing to operate. And I think with the government money coming in, people lost a sense of business, what was right, what was wrong, just rack up a debt. And now they've got to repay those debts, and the debts are too big. The workforce, you were never at 100% productivity, and we're still not there yet. So that's certainly hurt it. And I'm probably going to go on the back of, look, there's always been insolvencies, and there always will be insolvencies, but probably the biggest change that I've seen in the last 12 months, it's the size of the subby that's gone under that's certainly hurting the state or the country. I'll mention ones that have gone under. You've had Woodwork, Top Knot, they were on the news last year. They were a very large joinery carpentry mob. You've had Octorus, they were the largest joiner in the state in Queensland. You've had Final Form, they were about the second largest formworker in Queensland. You've had Scooter, they were the largest ceilings and petitions. So it's the size of the subcontractor. That's your tier 1 subbies that has fallen, which has had a cascading effect all the way down through. And when you lose your big players, your reserve graders don't have the key players to play A grade. I'm talking footy here, but you'll get my point. Even High Tech, when High Tech went under, they were a pretty good glazier. Now, when they went under on the Pro Build job, that was their first time that they'd worked on a tier 1 project, being 443 Queen Street. So again, their structure was fine for the small space, but not on the large space. They didn't have the infrastructure behind them, and that's what I'm going to say is the fundamental issue probably on the subcontractors is not that they don't try hard, they just don't have the infrastructure to handle it. And if you go back to my, don't actually do it, but the slide where I talked about the capacity, they don't have the structure, the business structure behind them. One, the balance sheet, they don't have the balance sheet behind them, but they don't have the business management skills to handle those larger style projects. And High Tech was a really, really good example of that. They were a tier 2 glazier playing in a tier 1 space, and they got burnt very, very badly by a pretty complex job. They didn't do their homework as to the level of complexity there. Probably just looked at it being a $20 million package and went, geez, we can make lots of money on this, not realizing that you can lose lots of money as well. So it's the complexity of the jobs as they got bigger. People have played in a bigger space that they probably shouldn't have. And I think it'll continue on a little while till the market settles down.
It's fascinating what you're saying there. You're saying that the implications of an insolvency is actually far more wide-reaching. It's not just the downstream that are affected by the subbies and the people that they employ and the supply chain that they utilize. It's actually as the smaller players then try and fill the gap left by the bigger players, they're struggling to actually create to fill that space. And so they get into new financial trouble.
I'll add further to that. Then if you've got the larger projects, so forget insolvencies now, you've got the larger projects paying larger money. So then the tier 2 subcontractors lose their probably no different to anyone else. BDR would be the same, losing employees to different sort of players. The tier 2 players losing to tier 1s, and then the tier 2s have to find replacements for that space, and it makes it very, very difficult. So to wrap this up, you've got an existing contract on foot. You've still got to finish it, and then you bring in new players because you've lost all your key players to the larger tier ones. The tier ones have either fallen over or got a lot bigger, so they're not coming back down to play reserve grade. You've got to find a new set of reserve grade players, so it makes it pretty difficult for them. So it's those extra prices, extra money that you've got to pay your reserve graders to play reserve grade to stop them from going to play A grade.
Yeah, no, it's fascinating. Ali, do you have anything to add to that from sort of like a macroeconomic lens, how this all impacts the situation we're talking about?
Yeah, well, I think one of the issues is obviously the higher interest rates have played into all of those issues, and it's having a significant impact on businesses. So, you know, the high interest rates and rising prices don't just mean higher borrowing costs for businesses. It's got flow-on effects to almost every other aspect of businesses. There's reduced sales and demand, reduced borrowing power, reduced levels of investment and business confidence. And, you know, it's also the inflation rate impacts foreign exchange rates as well. So that can have a huge impact on payments businesses have to make to overseas suppliers. So, you know, all in all, as Owen was outlining, there's a number of challenges that businesses need to address to try and keep one step ahead.
The other thing that we haven't really touched on yet is the supply chain and the problems that we had with you know, getting access to materials. Obviously, prices have increased, but even just delays. And I think, Owen, in our prep call, you mentioned that, you know, so we have to stock up now. So there's a financial burden having to store these goods in Australia in warehousing to make it available, to make sure, or to make certain that we have that supply there when the time comes. Do you want to talk just briefly about that, Owen?
Yeah, we've done introduced a number of strategies. One is typically we've always just left it with the subcontractor, you know, whether it be facades or glaze, that's glassed on the outside of the buildings. We've actually just taken possession of them rather than leaving with the subcontractor. And Ellie would have mentioned a little bit earlier that the bond market or the surety market is certainly tightening. So the subcontractors typically don't have the security to give back to us. So we're either buying things in advance and then just holding them. So at least we know that we've got them. So yes, it means for us, you know, it's certainly a drain on cash, but it's probably the only way that we can protect ourselves and protect the subbies that we've got on our books to ensure that the project is finished by paying them early, but making sure we hold them to avoid any liquidations.
Oh, and I can't hear you at the moment, but a question from the audience came through about you know, what's the government? This is you know, part of our national product. Shouldn't the government be stepping in to help out? And it's in the you know, interest of our economy to make sure that the construction sector stays afloat. And so maybe you can talk to that.
I don't know if can you hear me now, Andrew?
Yeah, I can actually. Yes, I can. Yeah. Thanks.
I'm probably going to go offshoot here. What's the government doing? The government's trying to protect the industry itself, and I'll probably talk more Queensland than anything, by introducing like PTL, the trust accounts, which you'll be familiar with being auditors, etc. You know, New South Wales, they're pushing an ISA, some sort of rating system. WA has a different but the same sort of thing as project trust accounts. I don't think it's, I would do it differently if I was in that position. I don't think it'll have the what would I say, the effect that they were hoping for, because it's probably a bit slow in implementing it, but they're trying to do it they're not even doing it at a national level, it's just at a state level at the moment. But They're just trying to shore up the project trust accounts to make sure the subbies get paid is what the government's doing, but with very little impact. You know, we've had project trust accounts in Queensland for quite some time, and insolvencies have never been as high as what they are now.
Okay, no, thanks for answering that. Yeah, that's a difficult one. We don't want to get into politics too much, but obviously the government does have a role to play in ensuring the the economy stays afloat as you know, as a holistic being, and the construction sector being a big portion of that is important to our success as a country. Just staying on government for a minute, we know there's big infrastructure projects happening all the time in transport infrastructure, but also social infrastructure, hospitals, and the like. What impact is that happening? Is that having on the construction sector? Is that helping or detracting from the future of the industry? Maybe Owen, I think you've got a view on that.
Yeah, I'll kick it off. It's certainly giving them hope at the end of what is probably a dark tunnel. The thing, probably this is a conservative view from myself, the projects that they've tabled or being forecast across the country, not just Queensland, they're very, very large. You know, Queensland's health spend is 10 billion, just under. Every state has a $2 billion social welfare housing rollout. You've got the Com Games for Victoria. You've got a big schools rollout in New South Wales, followed by Victoria, followed by Queensland. So it's certainly a large spend. The thing you've got to remember is the more difficult the job, the more competent subby you require. And I reckon at the moment you've got a lot of subbies on their knees and they don't have the infrastructure behind them to handle a job of that size. So whilst it might be a rainbow at the end of the tunnel, we'll just need to proceed very carefully that the right subby's chosen to be able to deliver that. Otherwise, it'll be pretty tough because they're going to be big projects.
Just to jump in there, I suppose one of the things that we spoke about before in our sessions was around the relationships with your subbies and how important it is to, you know, be on top of conversations with them and how they're tracking. And I suppose one of the things that we spoke about was how easy is that practically? Because I know you have your views on that, Owen, but I suppose one of the things that we talk to our clients a lot about is how important it is to talk to your subbies and make sure that, you know, you're doing the necessary checks and balances before you take on those projects with them. But just wanted to ask if you had any thoughts on that as well.
Yeah, I've got lots of thoughts. Our philosophy too is, you know, get to know your subby. That's, you know, first and foremost. There's probably two things I'll cover off on. One is they're pretty proud individuals. So to really get them to really open up is pretty hard. Some of those ones that have gone under in Queensland, I know personally very well, and they'll shelter you not from the truth, they'll only tell you a little bit of it. The second one is because they don't have the infrastructure. I know we all talk about IT being the way forward. I'd bet any other industry is far more advanced on the IT front than construction. So it's a pretty hard, like form workers, if I pick on form workers, there's no way you can do an IT program to improve that outcome. It's actually guys on site, which is subject to the weather. So it's a pretty hard industry. There'll be tools that you can use. There'll be guidelines you can use to give you a useful tool, but it's a pretty hard one to implement when it's actually just hands, you know, or you know, people out on the ground. So it's a pretty tough one, but certainly getting to know them inside and out. By the time you hear about it, it's probably nearly too late. They've already racked up big debts, with whether it be the ATO or whether they haven't paid entitlements. So then you've got to work back with them and You know, we've done weekly payments to assist. We've done all sorts of paying for materials because they don't have the accounts no longer. So it's doing whatever you can to get them through a pretty tough patch at the moment. So that's taking up a hell of a lot of my time right at the moment.
And I suppose that does also come down to the willingness of the head contractors to build that relationship and work with the subbies, and, you know, talking about those payment terms and things and being a bit flexible on that. But do you feel that that might be a challenge if there's some that are unwilling to do that to help each other?
Look, it certainly takes an effort across the board. If you're not helping, you'll kill a lot. So you've got to apply common sense. You know, yes, why pay them early when we're not going to get paid earlier? As I said, we're fortunate enough to have a strong balance sheet, so it makes my decision a little bit easier just to help out. But if you don't, your jobs aren't going ahead because you'll have killed a lot more. So you've got to. It's a collaborated approach, and I've said this a few times now. Even with developers now, they've come on board, understanding the importance of working together rather than whether it be a design, whether it be a building type. If you don't work together with either the builder and or the subcontractor to come with an outcome or a product that's usable by all, then it'll fail. The whole thing will fail because the price will be too high, or it'll be too late in the delivery.
No, it's a good insight there. Ali, just to come back to you, I wanted to just touch base again on the government side of things and the infrastructure projects, knowing that is a big part of what you do during the week. So, you know, what aspects of that are you seeing how infrastructure projects do impact the construction sector, and just wanted to see if you had any additional insights in there.
Yeah, well, certainly, those projects do have quite a large impact on the sector. I think, to talk to things that have been touched on by Owen and Ellie, profitability is obviously an issue, and project blowouts are obviously an issue going forward. And we're expecting that to continue with some of the major projects that we've seen. We've also got, or expecting quite a pipeline of major projects in the lead up to the Olympics here in Southeast Queensland. So, these are opportunities for us, I suppose, economically, the government to support the industry going forward, and to try and provide that support so that the cost blowouts don't occur. So there might be some changes in relation to the way projects are procured that might, alleviate some of these issues. There might be additional support, as I said, through other mechanisms such as, education and training, such as the recommendations that were included in the Productivity Commission report, so reducing some red tape for the industry. So I guess there's such a wide variety of things that are going on, and it's going to take quite a collective effort going forward to try and navigate issues for the pipeline of projects that we have going forward.
Okay.
Andre, I might just jump in there. What I expect to see going forward, I'm just looking at your programming chart there. So last year it was a very wet year, particularly Queensland, New South Wales. What I think you'll see, will there be project blowouts? Probably yes, particularly on the back of weather. I mean, the chart that I've got up there, we're expecting a better year than what we've had in the last couple. But I think you're going to have like time and cost for weather. So we've typically always done, we'll take weather risk in our program. You'll have a 10 to 15% allowance for wet weather or wind or heat as an example, whereas now we're not. So I think that'll get passed through to the end, either the end user or the end deliverer. In particular, if we're talking hospitals or Com Games or Olympics, that'll get passed through to the principal, and whether that be a provisional sum or whether it be a fixed amount, and an increase for wet weather being time and cost, not just time, because that's what's really hurting at the moment. It's the wet weather lag from previous years, where most of the instances we've either had time and or we've been given time, but it's the cost implication of those of the wet that's hurt. So that'll be a change going forward, I suspect.
Yeah, that makes a lot of sense. No, thanks for those insights. One of the things that Ali touched on right at the start, you mentioned what are some of the things that we can do or the construction sector can do, and you mentioned sustainability in there. We haven't really touched on that today, and I know that one of the audience questions that came through was around how can a construction company reduce the carbon emissions? It is a long supply chain. There's downstream, there's upstream. What does a single player, what can a single player do effectively to reduce carbon emissions? Ali, do you have a view as to how sustainability works into the construction sector?
So yeah, in a very broad sense, in terms of that, I suppose, sustainability does come at a cost, and that's a cost that smaller players in the market are probably not able to bear. So some of those things might be, trying to move towards a more circular economy model in terms of their business. There can be initiatives to build with different materials. For example, we've seen a lot of buildings, I think, pop up that are made out of bamboo scaffolding or have bamboo scaffolding, for example. So there are some things that companies can do in terms of materials, but just probably more broadly, looking at renewable energy sources as well is something that, businesses can employ to reduce carbon emissions and carbon footprints. Where they source the materials from will also be key. But again, this has flow-on effects to supply chain, to material availability, and also to the costs that are being borne. So hopefully going forward, there will be some incentives for businesses to employ some of those more sustainable initiatives and reduce their carbon emissions going forward.
Just to add on that as well, I think, sustainability is very much a hot topic, but as an auditor, this is something we're talking to all of our clients about, not just in the construction space, but everywhere, because it will be coming. Sustainability reporting will be coming. So in terms of what you can do now on that foot, in terms of strategies and implementing some good changes so you're ready for that, is a really good thing. So just to add to the sustainability importance, yeah.
That's good. And Owen, are you on the sustainability journey with Hutchie?
Yeah, clearly it's important. So we've had what they call a Green Star, a rating for a fair while. We were the first ones to do a 6-star Green Star here in Brisbane. So it's also about what you do with your waste and how you deal with it. So whether you reuse it, whether you're not. Typically, construction is knock the building over as quick as possible, chuck it in the back of a truck and just dump it. That's, everything's about speed. So it's breaking up that, making the concrete, the land, rather than, what would I say, mixing it with asbestos. You dig the land so it becomes filled rather than contaminated soil. So it's smarter operation, things like that you got to get involved in. But to give you all an example of what we have done in the sustainability space, of all things, we built last year a fire station out of timber, which is typically, so it has its benefits, it has its upsides and downsides. Timber's not real good with the amount of water that gets put around there, but it's a lot easier. The weight of the timber beams are a lot lighter than what you typically use for your steel beams. You can use a carpenter to chop the timber, as opposed to having steel fixes and big beams with big forklifts, cranes on site. So there certainly are some benefits there. It's just, but then if you're going to do that, that limits the size, the height of your building. So it's there's positives on one hand and negatives on the other. So as we go to a more condensed population, I just don't know if there'll be a 40-story high-rise made of purely just straight timber. So it'll be a mixture of both. But you can certainly get there with more efficient glass, your chilling system for your air conditioning. there's certainly a lot better. So that's the Green Star that I'm talking about, and that was, I think that'll take a lot more precedence than what it has done over the last sort of 5 years to ensure that the building managers, the body corporates of particular buildings operate a business or have a hotel, or whether it be hotel or units that are as cheaply or efficiently run as possible. So it's about getting smart in that space than worrying about, you know, what we're doing for the environment. It's the actual environment. You know, we don't use a lot of diesel typically per se, so you can't really cut down that. It's how you can do things smarter, and that's probably the easiest way to describe it.
And one thing, sorry, and just one thing I might add in that space is probably, you know, in terms of sustainability, there are inroads that all levels of government can make in terms of planning, and some of that planning is, you know, effective management of land use going forward. And so in the sustainability space, we're looking at, you know, optimizing site potential, considering how we preserve future corridors for expansion in residential and economic development, and those types of things that will certainly have an impact on our environment going forward.
No, good to understand. We're getting close to the end of our session together today, but this has been very insightful. I'm wondering if each of you have sort of one final takeaway for our audience, being mindful that our audience is probably in two fields. They might be players in the construction sector, so what can they take away? The other audience member might be someone who, like me, is just an interested observer as to what is happening, what am I reading in the papers, how should I understand what is happening to the construction sector? Maybe Ali, if we can start with you, what's your one message for today that we should take with us?
I think it's probably the fact that in all of the challenges that have been faced by the sector, there are still opportunities to change the way that businesses approach what they do on a daily basis to mitigate some of those challenges going forward. So I think one of those things is always trying to look for that opportunity where we can sort of optimize something or pivot and change our approach to minimize some of the challenges that that businesses in the sector have faced. And that contributes as well to the resilience of the sector. I think, you know, in terms of some of the challenges, it's been incredibly resilient as well in terms of how to navigate some of that uncertainty.
No, fantastic. Talks about the opportunity. Don't let your head hang low just yet. There's opportunities down the track. Good to hear. Ellie, what about you?
That's a difficult one. I'd probably say, you know, with that overview of, you know, there's light at the end of the tunnel, the next 12 months is what concerns me. And I think, you know, when you're looking at your balance sheets and understanding your business risks, you know, don't be afraid to reach out and ask questions and you know, make sure that you've got every angle covered. And that encompasses all of the risks around cash management, surety bonds, and attracting talent even is a big business risk to a lot of the construction companies. So I think don't be afraid to reach out. There's lots of people willing to help and talk to you about these things, but just making sure that you're on top of it is the important part.
Talk to your friendly advisor at BDO, basically.
Shameless plug.
Yes, that's it. Thanks, Ellie. And Owen, thank you so much for your input already today. What is your final message to our audience today?
Look, it's going to be a tough 12 months. 23 will be tough, but I'm probably with Ali. Hang in there, but don't be afraid to ask, because like I've had many conversations with many subbies, but by the time they come to me or you know, or go to professionals like yourselves, it's too late. You can't turn things around. The earlier engagement, the better. And until they get that in their head, they're probably too proud to go and ask for help right at the forefront. But if the earlier the engagement, the better. That's probably the takeaway message.
Okay, thank you, Owen. So look, this does bring us to the end of our session together. It's been so insightful. I've really enjoyed it. You know, we talked about headwinds, the challenges. We talked about why that might be the case and what are the challenges that are being faced by the construction sector. We spoke about the light at the end of the tunnel, the tailwinds and the opportunities and what can be done right now to ease some of the pressures. And we could have spoken for another hour on other matters. We didn't really talk about efficiencies that much or data analytics. There's other things we could have gone into. So I really appreciated the time. Owen, thank you so much for joining us from Hutchies. Ali from BDO and Ali, enjoyed your input, insights. So thank you very much, and thank you to our audience. Now, I'm putting up here the forward plan for our upcoming webinars. We've got the rise of alternative assets happening mid-May, innovation in prop tech and construction tech. Owen, we might have to get you back for that one. Regional growth opportunities, that's going to be a fascinating one as regional hubs grow and gain in importance. And obviously a favorite is the ESG value proposition. And that's so important in the construction and the real estate industry at large. So look forward to seeing you again for those. And again, as I said at the start, you'll get an email with a recording with details on how to register for the upcoming webinars. Appreciate your feedback. I think there'll be a short feedback as you close down out of this webinar. Look forward to seeing you for our next one. And thanks again to our panelists. Thank you. Have a good day.
Thanks.
Thank you.
Thanks, everyone.